Today we'll talk a little bit more on how to buy tax-free bonds. Before we talk of how to buy tax-free bonds, let's talk of what are tax-free bonds. There are very few instruments in India where the interest earned is completely tax-free. So for example, if you invest in the Public Provident Fund, the interest earned on PPF, or as we call it, Public Provident Fund, is completely tax-free in the hands of investors. So what happens is the interest is added to the total income, and again you get a exemption on the interest earned. Similarly, there are various instruments. The ULIP, for example, the income earned on ULIP is tax-free. Again, so we have tax-free bonds that were issued a few years ago by the Government of India. So typically companies like Housing and Urban Development Corporation, more popularly known as HUDCO, issued tax-free bonds. You had the Indian Railways Finance Corporation that issued tax-free bonds. You had the REC, or the Rural Electrification Corporation, that issued tax-free bonds. You had Power Finance Corporation that issued tax-free bonds. So what happened a few years ago was these tax-free bonds came out with interest rates ranging from 7 to it went up to 8.5, 8.6%. They issued these tax-free bonds, and now anybody who has bought it then or who buys it from the stock market now will earn interest depending on what the interest on that particular bond was. So you earn interest, and that interest is tax-free. So if you are in the highest tax bracket, you can save as much as 30%. So this is why tax-free bonds are extremely important to be a part of your portfolio, especially if you are paying a high income tax and you have various other investment instruments which do not fetch you tax-free income. So how to buy these tax-free bonds? Let's say you want to buy the tax-free bonds of Indian Railways Finance Corporation. What you need to do is you can buy it through the recognized stock exchange, that is the BSE and the NSE, and you buy it in a similar way as you buy stocks. Now, the one thing to remember is that when you are buying these tax-free bonds, like say example HUDCO, you need to make sure that you buy it at the right price so your yields are higher. What do we mean by that? Let's say you the initial issue of HUDCO gave the bonds at 1,000 rupees. So a person who bought it initially could have earned 8% interest. Now as the bond price goes high, the person sells it at 1,200. What happens is your yield, which was the interest which was 8%, the yield drops lower because the bond price has gone higher. So what you need to make sure is that you buy it at the right price so your yields are attractive. Now coming to the various bonds that we have on offer, as I said, you can look at various bonds, but at the moment the bonds of HUDCO look attractive. The government does not come out for bonds very regularly, these tax-free bonds. These were issued a few years back. Some of them, the maturity is a few years from now. Generally they were issued for periods of 10, 15 and 20 years. So let's say if a bond is maturing in 2027, if you buy it now, are you stuck with those bonds? The answer is no. You can go back to the exchange and sell these tax-free bonds. The one thing that we want you to remember when you're buying tax-free bonds is that they are not very liquid. So for example, if you want to sell 100 bonds or 150 bonds, you may easily be able to sell them. But if you're looking to sell 1,500, 2,000 bonds at a time, it's extremely difficult. Even if you're able to sell, you might not get the right price for the same. So you need to remember that liquidity is very poor. You can sell little every day. You can't sell huge volumes. So that's a thing that you should be concerned of. And what we said also was you need to make sure that your price is right. So you can check the details on the website of NSE. So you go to nseindia.com. There is a place where you can check stock quotes. You can similarly do it for bonds. So you can type HUDCO and you will get the bond price of HUDCO. They came out in various series, N1, N2, N3. You can check all the details, the amount of interest, when they will expire, when is the interest payment date. Most of the bonds, almost all of the bonds declare interest once in every year. Some pay in February, some pay in October. So you can check all those details on the NSE websites. We strongly recommend those who have are in the highest tax bracket and have investment in fixed deposits, etc., which are taxed, to move money from there to the tax-free bonds. Your yields can definitely, post-tax yields can definitely be higher if you look at tax-free bonds. For more, you can log on to www.goodreturns.in. We have a whole lot of articles on tax-free bonds. You can always log in there and look for more articles on tax-free bonds. Thank you.